Welcome back to the Desk Talk Podcast with your hosts, Trent Werner and Alex Magala, bringing you weekly episodes talking business, personal development, and all things real estate. Let's do it! All right. Whoop, 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 whoop. Welcome back to the desk. Let's talk.
Boom. A new intro every single time.
Every time. I like to keep it funky, fresh, spontaneous. It's Friday, a.k.a. another day of the week.
Yeah, I thought you were going to go somewhere with that.
I wasn't,
stoked,
but I don't really like.
Boom. Nothing.
Every day is a new day. Boom. Here we go.
Each day, turn the page.
Welcome
What are we
back
talking about
to
today?
the desk. Let's talk. We're talking about our forecast. And full disclaimer, this is our opinion.
Yep.
Our opinion. Seek whoever other professional advice that I need to say right here. Our opinion on the real estate market going forward, especially we're going to kind of target this summer because typically the summer months are the real estate months. It's our busiest time of year. Tax people's busiest time of year is right now. Ours happens to be in the summer, both rentals and sales.
Everyone wants to move or do something, go see homes when it's sunny. I mean,
when it's not dumping rain outside.
Pouring rain, yeah, it's not fun.
Side note, I had a family member from Robin's side who lives in, I want to say Minnesota or something like that, send a video of it raining, and it was a quote-unquote monsoon, and I sent her a video back of me walking my dog in flip-flops with no umbrella yesterday. So, true Oregonian right here. All right, what's your thoughts on what's coming up?
Well, from the side of lending, I'm going to speak on that kind of side. Obviously, you can speak on like the real estate side and what you see is going to go on there. But from the side of lending, it's already kind of happening. Rates are going back up. So you're not getting a 2% in front of your rate anymore. Like they're already creeping back up. I mean, most first-time home buyers are sitting at like 3.5 now, 3.625. And it's kind of just what we've been saying all along. Like the Fed can't keep the rates low forever. And it's got to go back at some point. And so it's going to hit its peak and kind of level out and not soar through the roof. We're not going to see like 5% in 2021. It's going to maintain at like 3.5. Could change as we get closer into summer, but right now it's pretty mellow. We had a very volatile last couple weeks, but things are mellowing out. But going into summer, you're going to have higher interest rates, so AKA less home that you can afford. There's probably going to be less buyers out in the market now because there's going to be less pre-approved buyers out there. A lot of people are losing their pre-approvals because they were pre-approved at like a 2.875, and to go from a 2.875 to a 3.5, it's a big difference, and you lose a lot of your kind of qualifying capabilities. I mean, I see it with a bunch of people that I'm working with, literally myself.
Which we talked about.
Other people loans that I'm working on. You know, it's just like they've now fallen through the crack, and they're not even shopping anymore because the rate was bad or the payment. You know, it's just like once people figure out like, oh my gosh, my rate's here and now my payment's upwards of $3,000. It's like I can't make that payment. The house fell through. I'm moving on. Like I'll look again in sometime this year. So it's just like people are already getting hit with the problem. It's now just a matter of how can you go out and kind of figure out your situation. I mean, everyone's situation is going to be different. So got to get your numbers. That's like where I'd leave it at.
Yeah, and we had Fed GOAT Jerome Powell talk twice this week about, and when I say this week, this is March 19th, 2021. His forecast or opinion was that they're not going to increase rates until like 2023. That being said, I know there's other people involved with the Feds that think maybe 2022 early. Some people even said late 2021. My personal opinion is they probably will wait till 2022. I don't think they're going to make any crazy adjustments right now just because of the whole pandemic and whatnot. I know vaccine news has been positive. President B hit his goal of 100 million vaccines earlier than expected, which may have some impact on the economy. I hope it does.
Hopefully
so there's
10-year
10-year yields going up.
Treasury bonds.
Yeah.
That's why mortgage-backed securities went up, is the Treasury bonds.
Mm-hmm.
So it's just, I mean,
there's a lot of factors.
Everything is starting to get back to normal, which the reason why we had such a crazy year last year was because we had the pandemic. And the pandemic, they were forced to kind of put the walls down, figure out how they can still let money flow into our economy. And that was what they did. Lower interest rates, do everything, promote kind of buying. Now you're seeing it, everything get back to normal. So now it's like, okay, the walls are going back up. Like, we need to raise things and make it a little bit harder. You're seeing it with like literally second home and investment properties. They're now a 50 basis point difference. Like literally this past week was just an immediate increase by 50 basis points. And it makes it a little bit harder to qualify now. So it's like they're already making it harder for people to go out and buy those investment properties or second homes. And it's kind of signs that we're getting back to the normal life. Yeah, which is good.
Yeah, I was going to say, I don't think normal is bad.
No,
I think we experienced a crazy abnormality in the lending world and the real estate world as a whole during a time that, to be honest, probably should have been bad.
Really bad.
Economically, right? I think this summer, just based on, like you talked about, people's diminishing ability to qualify, I think there's going to be a decreased buyer pool because of that. Like you talked about, people that, they were pre-approved at 2.8, but now we're seeing mid-threes again. They're going to be renting for another year, in my opinion. And so the buyer pool is going to decrease. I don't want to say significantly, but it will decrease, which will reduce competition for buyers. Sellers aren't going to have as much luxury listing their properties right now. That being said, I think it's still going to be a seller's market. We're definitely not going to see inventory spike to 6 months.
No.
I think we'll start to see inventory numbers right around, I'm going to guess 1.8 to 2. Definitely not this summer, in my opinion. However, we saw a flip. So last spring, inventory spiked, which usually it's decreasing at that time. And then over the winter months, when it typically increases, it dropped to the lowest it's ever been recorded. So we kind of saw a flip in the normal cycle, or the historic cycle, where in the winter months, typically the inventory is going up. This year it went down. Mm-hmm. I'm interested to see if that has any impact on the summer months. Maybe we have a slower summer. That being said, I don't think so, because there's still all those people that didn't sell their homes last year because of the pandemic that are in need of making a move or want to make a move, whether it's downsizing or upsizing.
I think you're going to see a lot of people this summer pull the trigger on listings now that they're able to kind of once the market mellows out a little bit, they're going to get all the people that want to sell to try and get still the top dollar that they think they can get, and then turn around and have an opportunity to at least buy. Because that's the biggest thing that is holding people back from selling, in my opinion, is where are they going to go once they sell?
Yeah.
Like 60-day, 90-day rent back. I mean, it's like crazy rent back periods that you're hearing out there. Mm-hmm. And that's because it is so hard to find that next house. So unless you're that buyer that's just got a ton of cash and can go qualify for both homes at the same time and then sell this one, you're not going to have a chance where you need to sell this and then you can go out. It's just like you're going to see this summer where, less buyers out there. They're ready to sell and try and find that next house for them to kind of go live in. So it's going to pick up. It's just at the same time, it's kind of shitty for the people out there who were first-time home buyers and were excited and like getting their feet wet. I mean, I think that's what 2020 brought, was a ton of people, young people our age, millennials, Gen Zers, like just stampeding to get their feet wet into the market, which is good because it's like starting young is better than starting old. Obviously, you're jumping on the train faster. Now all those people are kind of back on the fence because they're like, well, the interest rates are worse now. It's like, yep, I get it, but still look at it. I was complaining to my mom about mine and my aunt, and it was like my mom, their first rate was 12%, and my aunt was 16%. So it's like, granted, when they're buying their $50,000 condo at 16%, it's way, way cheaper than a $250,000 condo at 16%. It's like the inflation of money and whatnot has caused rates to go down by so much, but still, it's alarming in your eyes when my personal rate goes from a 2.875 to a 3.625, and that's $300 a month in just interest. Mm-hmm. So it's just like, I feel for all the people out there. I myself am going through. I just locked. No more gambling.
Not a baby.
2.99.
Really?
Yeah.
Good.
I bought it down though.
Well,
$500
for half a point.
Yep.
That's not bad.
No.
I think I think you hit it on the head. I think first-time home buyers, that buyer pool is going to diminish because of just the qualifying power that we saw with rates going up. I don't think the buyer pool is going to decrease significantly just because of the first-time home buyers dropping out. We will still have the movers, the downsizers, the upsizers, whatever, that will list and be able to buy something now. And I think that's where it's going to kind of keep the buyer pool,
Yeah. I mean, I saw a post on Reddit, and it was about the Texas real estate market, and it wasn't a real estate agent who posted it. It was a transaction coordinator. It was a girl who worked within a real estate office. It was a pretty large office, and she just tracked like the business over a period of 2 months and like where it came from, and it was like 98% of the business was people moving to Texas from California, from New York, from like China, Singapore, like all these places all over. So you still have the people who are trying to move to markets, and here in Oregon, you have a ton of people trying to relocate here. Oregon is a very desired place to move to right now.
Number 3 on the list. It did drop 1 spot from number 2 previous year, but Oregon is number 3. Texas is, I want to say, like number 7.
Yeah, I mean, and then you have all these Californian people moving here, and they're the ones with the complete cash offers.
California is the number 5 most moved out of state right now.
Yeah, like people are leaving California and moving to other places. Texas is a big kind of hub for people to move to right now because it's up and coming.
Mm-hmm.
You see a ton of investors. I mean, that was also in the post, was like most of these people weren't buyers, like first-time home buyers. These were investors buying a second home or buying an investment property in Austin, Texas, or, from New York. It was just like people see kind of opportunity, and you don't have to look within your own market. I mean, there's other markets out there that do very well, and you can buy cheap real estate and rent it out.
Mm-hmm.
For example, like Indiana. Indiana is not a place where a lot of people want to live, but they will rent because they've got a job that's like a contract for 2 or 3 years.
Mm-hmm.
So you're talking like $100,000 houses, and people are going to pay like $1,200 a month in rent. So it's just like you can look outside of other markets and figure out places, and that's essentially what these investors are doing. And they're coming in and just buying houses, expanding their portfolio. When opportunity knocks, like they're jumping on it. And I think people started to do that in 2021 with all the rates and kind of the buzz around it, and people kind of kicking you in the butt, like go do it finally. But now that it's kind of spiking back up, I mean, it goes with the news. I think that's the big thing too, is having solid news versus like bad news. Like following CNN and watching the news about interest rates up and down, it's just like it's not the best news. Like their news reporters, they're not doing it for the daily. They're not invested themselves. So it's just like have the right news source and be confident with your decision. Don't kind of follow what they say. Do the research yourself.
I was listening to the Win podcast I think it was earlier this week, and one of the guys they had on there, Ari, he's a big investor that we manage a bunch of his units at Uptown. It was really interesting to hear him talk because he has a finance background, venture capitalism, all that stuff, and the way he looks, and now he has his own syndication company, but the way he looks at investing in real estate is just way more in depth than I've ever heard or seen before, or anything that I've ever done. And he buys big 20 plus unit multifamily apartment complexes. But what he was talking about was how Portland, he's from Bay Area, obviously it's cheaper than the Bay Area to buy here in Portland, but we're landlocked. Like Portland is pretty maxed out in terms of the area that it is.
There's literally nowhere.
The only other place to go is up. And so the way he views it is there's a demand kind of cap, right? Like you can't just expand wider like Phoenix or Texas.
Reno,
yeah.
Big markets where you've still got land to build in.
Yeah. You can't go out. So now the only place to go is up, and that is going to create almost a demand cap, which supply is keeping. I mean, we're the number 3 state to move to, so supply is going up, but demand is kind of capped. What's that going to do in Portland? It's going to drive prices up. So if you own homes and own property in Portland metro area, it's going to appreciate more significantly than other markets, Phoenix, whatever, and you're still able to rent it because there's more people wanting to move here. And if you need to sell, you can sell it for a higher price. So I thought that was really interesting. Basically, to wrap everything up, though, summary, interest rates are obviously going to kind of level out after their quick spike. I did have a question for you. Have you seen the interest rates move that much in that short amount of time since you've been in it?
No,
Yeah, I thought that was
not in
something
my
that
tenure. It was pretty bonkers to look at like the little. Well, so I'll let you guys in on a little secret. I have it paired to my text message, so the little rate watch like thing, it sends me like updates every 20 minutes or something like that via like it's like here's the time, here's the change in bips, and it's usually like a 16 or like a 20. Like the most I saw was like a 26 or 27 kind of negative or positive bips change. Bips is basis points. There was like a 2-week period where every single text that was coming through was like 100 plus, and it was like, what the hell? Like 100 plus is a big move on a basis point.
and 100 bips is 1%, right?
Yeah, and so it was like, what the hell is going on? And it was like up, down, and like you look at it, and it was just like you're looking at a stock. It was like a stock you'd be like, I'm staying so far away from this. This is ugly. But
It'd be like GameStop.
Some look at it and they're like, this is a really good opportunity. But like I was like, whoa, this is bad. And so yeah, it was kind of eye opening to sit there and watch it happen. But then at the same time, watching it happen, you're like sitting there panicking, like, holy hell, like I need to lock all these people. So it's like playing the game of like, we're not locking them on this up spike. Like, when are we getting a reprice for the better? Let's lock them up. And it was just like day after day. It was like, I mean, some people could probably say they saw it coming, but most people probably didn't. And I know a lot of people out there who got burned and burned hard.
Oh, yeah. I have a couple people in mind that happened the same way. They didn't lock, and now they're paying more. All right. That's all we got. Again, I think we're in the same boat. I think we both think it's going to stay pretty solid. The real estate market here in the Portland metro area is strong. The economy seems like it's growing and still strong. So
getting back to normal.
Yeah, we'll see what ends up happening. Again, that's just our opinion on the Portland metro area real estate market. I'm interested if you guys have any different thoughts or opinions. Reach out to us. Let us know. Yeah.
Let us know.
Feel free to like and subscribe and share and
all the jazz.
Yeah, the whole 9.
As like 90% of YouTubers say, smash the like button.
Yeah. I'm going to change that to punch the like button. Can we punch the like button? All right, we're at the desk. We're done talking. We'll see you guys next week. Have a good weekend. Peace.
Adios. That's the end of today's episode. Thank you for tuning in. It truly means a lot to us. If you haven't already, please subscribe and share this with friends. This helps fuel the podcast and gets more and more guests on our show. Hey, go follow us on Instagram as well, Desk Talk Podcast. Go connect with Trent and I as well. We're on Instagram too, LinkedIn, you name it. Stay tuned for more episodes.